Steve, Jamie, how's it going?
Hello, thanks, Scott. Hello, Jamie.
What's
Andy,
happening,
Jamie.
guys? Hello,
Seems like we
hello.
just did this yesterday, didn't it? Except
I know. I feel like I've been
roles
here
are
before.
roles are reversed today. So let's get started. It is 2019. Thank you, Scott. I know you all saw me make that correction, so I can't sneak that one past you. Trade of the week, welcome. It's been a couple of weeks with the holidays, and we're back in the seat and ready to go and talk about some observations that we had today and yesterday. But before we get there, the old disclaimer, you realize we are not registered investment advisors. We are not financial analysts. We are not licensed and authorized to be giving out financial advice. Therefore, we are a software as a subscription-based company. And these are just opinions of a couple of hacks of myself and Jamie. And whatever we say really shouldn't be construed as financial advice. So let's just get right into it. Typical slides to remind people we have a very deep learning curve process here to help people get up to speed quickly on our 14-year-old product, which is extremely powerful. So it's not something you're going to learn in 1, 2, 3, 4 days, not even the first week. It takes a little while, and so we're here to help. And the way in which we do that is first and foremost Barry's live trading room. Over 500 people a day joining for free. That's right, for free. This room gives a lot of paid rooms a pretty good run for the money. So if you haven't joined Barry's live trading room, you can get that on our website at the very top under live trading room. And just create a username and a password. And Barry is there every day, market day, from bell to bell, sharing his desktop, answering questions. A couple of handfuls of really good traders in there that also take the lead in the chat to try and show you what they're focusing on and their reasoning behind that. But Barry's very patient, and he takes a lot of good time to help people understand not only the markets, but how to use trade ideas in the market. So it's a great place to hang out. If you're not there, you should be asking yourself why, and maybe go knock on the door and see what you've been missing. Every day during the week, we have these afternoon webinars. I helped Jamie yesterday. I do the trade of the week today. Dan and Brad on Wednesdays usually kind of talk about what's coming in future releases. Then Thursday, Jamie and Andy pull together some really good content based on the Thursday trading environment. So the script is written that day. Friday, we have this 3-hour support session. This is, honestly, guys, this is the best way to come get questions answered. We don't do phone support. Phone support is useless in this type of environment unless you want to give a credit card number and talk to the accounting people. That's different. But learning how to use this program, you need to see it, feel it, and touch it. And so on Thursdays, we have a 3-hour open session. We don't have any preconceived content. You guys basically tell us where you want to go. So for the first hour of that day, it's usually a pretty mad rush of people wanting to get their questions answered. And we can demonstrate that on our desktops live for you. Even if you had a concept that you wanted to create a type of scan, that's the forum where you can come in, and we'll do our best to try and walk you through it. And everybody obviously learns through osmosis every week on these Friday 3 hours. There's something in there that you will learn. So 11 to 2 Eastern, no charge, free to anybody who wants to come by. Just sign up for our webinar series, and you'll see that option for the Fridays. And then lastly, at the bottom there, TI University, I just completed the 201 class today. Sean did the beginner 101 class yesterday. And so Monday through Thursday, 4 classes reset every Monday. We also have a recorded version of all 4 of these. If you wanted to get your hands on that, you could email us and we could send you the link. But live every day, Monday through Thursday, that is, from the 12 to 1:30 Eastern period, we're going over preconceived content to kind of walk you through the beginning stages into the more advanced stuff. And Jamie will finish this week on Thursday with some advanced backtesting stuff. So if you're looking for that, please feel free to join in on the Wednesday, Thursday sessions. Andy will be back tomorrow from vacation to handle his 301. I'll help him with that as well. So all these things we just discussed, guys, a lot of opportunity to come in, pull up a chair, and get some help. So on to the actual content. Again, man and machine combined. Our technology, and I would include AI especially on that, is not a one-all be-all substitute for market knowledge. You have to have a little bit of human discretionary intelligence in there as well. And I say it every week, you know, that's the future that we're going to be witnessing here as we go forward. Human beings working with machines, machines bringing us a nice curated list of high probability returns, whether it's, you know, oncology, whether it's football, fantasy football, anything data centric. We're going to be using the AI and machines to bring us a nice data set of curated work that would take the human being days, hours, months, who knows what to come up with. So it's a good segue. That's why we always like to talk about that. Today, I don't have too much new content for you, but we'll try and keep up the content going here. We have the market recap as usual. I have some thoughts on the Holly recap today, as does Jamie. And by the way, I see Jamie in there taking care of questions in the questions box. Thank you very much. The trade of the week, which is the flagship name of this webinar, was US Steel X. We'll talk about the concepts behind picking a long strategy this week and why we came up with that one. And then, you know, I don't really have anything new to show on the technology side, but, you know, maybe a little bit of trader psychology. I figured I would just share what I'm looking at 10 o'clock Eastern. The bell rings. We have 30 minutes of trading. There's a lot going on in that first 30 minutes. And I don't know what you're looking at, but I'm going to kind of show you what my focus is. It's a highlight bullet point of about 5 or 6 things that are of interest. I usually like to have in front of me by the top of the hour to kind of maybe gauge what type of day it could be, but we'll get into that. And then time permitting, if you guys out there have a chart that's just befuddling you and you want to have a couple pair of extra eyes look at it, we can finish up today's content with some chart requests. And it always helps to know if you let us know you're currently long or short, or if you're thinking about long or short, what the situation is. That can kind of help our synopsis there. So let's minimize the old slideshow and say hello to my desktop. And most importantly, S&P, SPY. For those, I know there's a few of you that tuned in yesterday with Jamie. I mean, I'm probably going to be rehashing a lot of the same stuff here today, but this is what I'm seeing. Let's grab my pen. Down here, this, if you guys recall, they were talking about 20% off the highs, which means the big B word, bear market. So what this market's trying to figure out is was this are we in a bear market, or was this just one big nasty correction? And I don't know the answer to that yet, and I'm not even willing to put my reputation on the line and call it one or the other, because that's where we are right now. We're at kind of a crossroads, an inflection point. It's very possible that the correction that we just saw might have been all we needed to give the price action a much needed shower. This market was in definite need of a pretty good correction. We had a few corrections along the way, but this one was the mother of all corrections. Hang on one second, I'm going to shut a window here. All right. So what I was pointing out yesterday was that let's do this. Let's call the good case and the bad case. Let's start with the bad case, meaning that this bounce right here was nothing more than a oversold dead cat bounce of which needed to be sold. Okay, there's a couple points of interest here. This inflection point is a very substantial inflection pivot line, which I drew back off of basically these lows right there. And I think we're going to run into some selling when we get to that point, because the push back up through the moving averages, the declining moving averages, told us one thing right here. We could have easily rolled back over and gone lower, but we didn't. And so therefore, we dug in, sideways action, very constructive, and then moving right up into this pivot point. But here's the downside. We're doing it on declining volume. All this right here is shaping up to be just another type of a dead cat bounce, but we don't know that yet. We've had some really constructive closing candles the last couple of days. Let me clear that off for a second. So what I'm going to be looking at going forward is, can we post a close above this pivot line? Remember, this was prior major support, and major support can be retested and can become resistance. There's a very good case to be made for that. Okay. What will What will negate that scenario would be is if we can post a couple of closes above that pivot line and show the market that, hey, that line was tackled and it was put away and it's no longer an issue. But hitting that issue, hitting this on like one day and running through, let's say tomorrow, something like this could possibly happen. I'm not predicting, I'm just saying it could. We could have a nice push up, trade through, but at the end of the day, we get a wick that looks something like that. That is not going to be what the bears want to see tomorrow. Okay, not at all. What would the bulls like to see tomorrow? Excuse me, got that mixed up. The bears would love to see that. What would the bulls love to see? Well, maybe something like a nice wick and a nice green candle that closes on highs above that pivot level. That would be a great case for the bulls. We don't know what's going to happen yet, but we're setting right up for the textbook dead cat bounce, again, of declining volume and moving up higher into a targeted area. So we're still at an inflection point. I mean, we could go sideways for a couple of days under this. That would be the best case of all, to garner up some strength and then have the ability to push higher. We'll see, but for now, this is where we are, and this is where the tire and the rubber hits the road. Are we going to build on it, or are we going to fail? I don't know. Let's look around a little bit. Let's look at the NASDAQ, because there's something to be said there. NASDAQ was one of the ones leading us down. You know, the Apples, the Facebooks, the Amazons were getting crushed 30–40%. So the NASDAQ led us to the downside, but they've been rather buoyant and actually did a great close here today. So back to the plus column, NASDAQ, and you can see I have drawn its respective pivot line. I chose this area right here. These are my lines, and we kind of butted right up against that yesterday. But today, look at that, we reclaimed and closed above this pivot line in the NASDAQ. So that's one for the plus column. But unfortunately, NASDAQ is the only one that did that. The respective line in, let me delete that. The respective line in the IWM has not been reached yet. And the respective line in the Dow has not also been reached yet either. So the NASDAQ's a little bit ahead of itself. So it closed above its pivot line, and the S&P/Y still close, but right below it. I'm going to be watching this one. This is where all our financials are. NASDAQ is more technologically laden, but it would be nice to see that NASDAQ hold above that line. And also on the plus side, these moving averages are starting to curl. And so what the bulls want to see are these two moving averages kind of continue to curl back up and support the price. If we can get that for a couple of days, that's going to be very constructive. But again, what we don't want to see is just one big wick through and then a close on lows. That is going to be ugly if we get something like that. Don says the Qs did close higher, but on weaker volume. Yeah, Don, I can see that too. I mean, we're back on SPY here, but the weaker volume, this is suspect down here, okay? This is where all the action was taking place, in this volume. So we will see. Again, I think hate to keep beating the same term, but we are at crossroads. We are at an inflection point. We are where the rubber meets the road. We're going to see what happens. One of the things I wanted to point out too, I made a note last week, was, you know, when nothing was working, the TLT, this is the ETF for the Treasury. Again, I love to go back to the simplicity of the 10-period moving average. Held it there, and it's starting to breach it today. If stocks continue to move higher, the Treasuries might start to fall. But technically speaking, they were doing pretty well, holding up. Another note that I made here that I thought was on the constructive side of things was just, you know, the sheer candles here. I mean, actually, let's go back to the intraday, because I think I can make this point better with the intraday. Okay, here we go. Gap up and then hold, trade higher, and then didn't give back too much of the day. And then this is the most constructive of all, in my opinion. The gap up, pulling down, filling the gap, and then moving higher. You know, this is constructive type of movement. But in the bigger picture, we're running right into the brick wall. So we shall see. It's been constructive up to this point, but we'll see. And I don't really have a bias either way is what we're going to do. I definitely don't like the declining volume. I'll tell you what, again, tomorrow I'll draw that wick one more time. If we see something that closes up like that, I'm not going to like it as a bull. I would be very nervous if I was a bull to see us wick through trade through intraday that pivot point and then turn around and close back on lows, that will be not constructive. That will be very bad. So that's about, I think, all I have for this segment, unless Jamie wanted to add something on market commentary.
Doctor, I concur.
All right. All right. So moving averages, they tried, but they weren't strong enough. I think that pivot line is going to be much stronger than those moving averages. They're going to have a lot more people on the other side to bust through something like that, in my opinion. All right. So that is that. Let me turn off my little marker here, and we'll head over to Holly. I know Jamie's got a few things to talk about, but I want to set a few things up myself with the AI. Going back to the gap up, typically the AI has a really rough time on the gap up days. And I was very pleased to see a very quiet blotter this morning. The AI actually kind of let the price action come back down, because when I look at all of the trades today, what I want to do is focus on the directional bias. I see 1, 2, 3, 4, 5, 6 shorts in a sea of about 20 longs, maybe a little bit less. So directional bias from the opening bell, really from the first few minutes of the day, the AI was sending signals that long was the only way to go. Even as the market was coming down and filling the gap, there was not a lot of shorts. There was one short, hour and a half after the open, 2 hours after the open. So the AI was really kind of holding steady and not doing a whole lot as the gap was being filled. But then as we started to move back up, it became clear that what the AI was seeing, the path of least resistance, is still up on a day like today with all of these direction. I mean, there's enough longs to short ratio there for me to equivocally say the AI is telling us long is the path of least resistance today. And I'm going to tie into some more of that when I go into the next segment about what are you looking at 10 o'clock. You know, this is one of those things. And so I was extremely pleased to see that the AI was patient on the gap up, and as well pleased to see that it was pointing people in the right direction. These little thumbnail squares over here, they had a rough morning. Some were green, some were red, but by the time this S&P settled in and filled the gap, the risk on category really kicked into gear because we had participation from the backdrop of the market, and the AI was essentially saying that the long direction was the path of least resistance today. So if you're somebody who really came in today and you thought you had a preconceived notion the market was going to get weak, the market was going to go down, and I got this list of 3 hours of homework I did last night with these 10 names that I want to short today, you're foolish if you come in with that attitude when you've got this kind of data just staring you right in the face saying, why do you want to go short when the AI is showing us the path of least resistance is to go long? And I'll also add, there's a very low trade count today. So for the first hour, really proud of the AI sitting on our hands while things started to catch into gear later in the day. But that was what I wanted to kind of start off with, and I'll have a bit more to say on that on the next segment. But Jamie, you got anything you want to talk about with the AI?
No, I'm pretty much on the same page as you, Steve, and was also pleased to see, you know, not too much activity right off the get-go. But you know, I did have, you know, this morning, of course, sitting there before the open, like, here's the gap up. We all know what happens when we have the gap up.
Sloppy.
Then on top of that, the CC readings were like 60% bullish after the first 15. I'm like, yeah, I've seen this before, right? Now, the market did finish higher. Now, what that little piece of information did give me the confidence today to do is down there when we were off the SPY is to have confidence in the longs and go, you know what, typically the compare counts will either go immediately, but the more there's a gap one way or the other, there's, you know, sometimes it calls the ending position from what I've found. But after the initial little downturn took in, you know, I was chatting back and forth with a couple of people like Michael Noss this morning. I'm like, you know what, there's a pretty good chance that, you know, we might not hit highs again, but I think we might get back to the open. So it was good to see all of those little pieces come together today, right? And then the Holly Trio did end up posting some, you know, what do we got here? We got 270, almost 6 points of potential over there.
Well, most importantly, not to interrupt, but is when I see all three of these on, and risk on, that is 3 green. That is a solid indication that the path of least resistance, or the order of the day, is to try and hang on as long as you can, because the AI is demonstrating that for us.
Absolutely.
Risk on is outperforming risk off in all 3 segments today, and that's what we want to see. We don't really care when one is one and 2 are the other. I like when they're all 3 lined up. They're all 3 saying the same thing. It gives us a little extra confirmation.
Yeah, when you have those days where one's risk on, one's risk off, a little bit more chaotic of a day. But yeah, overall pleased, and we'll see what happens tomorrow.
All right.
I could go over a couple of risk, if you'd like me to, I could cover a couple of risk ons. I mean, you don't have to look very far today to find a lot of good risk on activity.
Yeah, this column on the right, risk on column, is just, oh, that's a nasty one. Look at this one. Here's a great example, guys, of the dark shaded color exiting. Holly exited this trade right here in WPC. Looks like the exit reason was reduced risk. Okay, so Holly saw something, but as we often say, these calls are good for the whole day. This little choppy area right here, I'll get my pen back. This little choppy area right here was Holly saying, oh, we're going, oh, no, we're not, we're flat, no, we're negative, no, we're going to reduce risk, we're going to cut it, it's just not going. But you never really want to turn your back on some of these, or any of these calls, because lo and behold, as soon as Holly got out, it started creeping higher, and then comes my 10-period moving average, just kind of walking this thing higher for the rest of the day. So this will happen a lot, guys. Maybe the AI gets in a little too early, there's a bit more volatility and washing machine churning back and forth. But just because the AI exits, I would not take my eye off some of these charts if you're keeping an eye on something that you do like. More often than not, we have seen them come back to life after Holly has gotten out for some reason. All right, was there anything else specifically that we should talk about before we move on?
Just like that trade, Steve, that ALLK, which was a short, obviously. But, just kind of sat around all day right at the entry line, right? And then what did it do? It barfed it up and had a good move towards the close. And, kind of ties into what we talk about all the time, when yesterday specifically, is look at the ones that are just kind of flat to up or down a little bit, because they're the ones that can be exhibiting these nice little consolidations. And once you get familiar at picking them out, you can be like, hey, once that little range is broken, we could still have a move. The pressure's building, and at the same time, you can get pretty much the exact same price and sometimes even better entries on Holly, just slightly above the blue line there on the ALLK. That was plenty of time to act.
Well, before we leave the Holly segment, I'd like to leave you guys with this. This is a very sophisticated tool that can help, and it's proven to be a helpful, sophisticated tool. And when I say that, I mean I'm going to pull these up. This is since May of this year. This is all 3 Holly segments combined. This is risk off. This is the big daddy of them all, letting them run. Today being a perfect example. Risk off, running circles around risk on. The blue line is the S&P. So what's happening here on this green line is a nice continual aggregate demonstration that the casino odds, basically the house odds, our casino odds, are favoring what the AI is doing. Is every day going to be great? No, here's a flat spot for about a week and a half right there. But in the long run, the AI seems to have an edge. And again, that comes into play whether you're looking at individual trades or just trying to focus on the long. If the market tanked today, this would have been a horrible performance day, but it didn't. Nothing but longs. At the end of the day, the AI was correct in terms of at least the directional bias. Not so much the individual trades, but the directional bias. Let's take a look at what risk off looks like. Here's risk off. Not quite as strong as risk on. The S&P is a bit more defined because we don't have as much separation, but still, even in risk off mode, getting out with Holly's exits, this is the kind of long-term aggregate casino odds that you would expect. And I didn't draw these with a crayon. I pulled these out of our back office data center. So glad I remembered to do that, because I wanted to leave you guys, just continue to remind people, the AI is going to help find us the path of least resistance day in and day out around here. All right, so now we get to the trade of the week. So, with the volatility and not having a trade of the week last week because of holidays, and then, calling SDSs and gold miners before that. Those were a lot of defensive plays over the last month or 5 weeks in the trade of the week selection process. And last thing we wanted to do was come in and say go to cash or try and short the market. But we found something, thankfully, on Friday. Market had a really good lift on jobs numbers and some employment data. I mean, some other data. I can't recall off the top of my head, but it was a really good day. That green bar 3 days past. So going into, there it is right there. That's what the market looked like going into the weekend. So there certainly could be some constructive ideas there. So we went to the Let's Go Fishing scan, which of course is on the channel 4, and it's in real time. What the Let's Go Fishing scan looks for is just simply stocks that are trying to break their downtrends, but these are stocks that are healthy on the balance sheet. They're not in debt. I mean, they've got cash, and for whatever reason, they've been beaten up. So it confirmed on there that U.S. Steel, which is X, is the trade of the week. And let me go back. Perfect. All right, so there is there's the chart as it looked on the weekend. So horrible downtrend. I mean, this thing has been getting clobbered since $40. And pretty nice base was built last week. Didn't ever get back close to lows, a lot of sideways action, but had a really nice day with good volume like a lot of other charts did that day. So we could have picked a lot of different things. I mean, we could have even picked GE that day. GE was starting to look decent as well. But all we had to work on, let me go back, oh shit, I lost my frame of reference there. There we go. All we had to work on was this one green day. Well, it was time to call a long, and if the market was going to dig in and try and put up a fight, a long to have on the board, such as U.S. Steel, a very well-known name that showed some technical willingness to break its downtrend. It broke its 20 and closed above its declining 20 in one day. The idea was for the entry to say, well, it's very possible that we could have a day and a half of movement where it runs up and follows through and then starts to pull back and get sloppy again. The way in which the actual content of the email read was, the trade of the week is live on the open, but the exact entry is up to you, because we're no longer starting to do exact entry points. Believe it or not, it's really screwing up the market out there because everybody starts entering the same buy limits and sell stops. And the HFT, they have fun with that. So we're not going to give them the food that they want. So I had mentioned, the idea may take a few days to work out, but if you could buy as close to $20 as possible, that would be the best scenario. And so for anybody that came in yesterday and saw this gap up right here and said, boy, I don't think we should be chasing gap ups, you would have been correct. If you just be a little bit patient, a really strong indication is when a stock does this and then trades into yesterday's range just a little bit, finds some support maybe in the upper 70 or 80 percentile of yesterday's big green bar and then starts to move higher. That's always a pretty good sign in my opinion. So for those that were able to be patient and wait for that gap to come in and get a fill maybe around 2030, 2040 area, this would be kind of considered the entry zone. So as I said earlier, this kind of pattern, it's not momentum. We're trying to turn, a giant oil tanker into a new direction and do a new course. It's not going to happen overnight. So I fully expect that if this trade does work, let's go forward now in a couple of days, the sideways action is what we're going to get. And as you can see, today and yesterday is pretty much sideways action. And then if we get a nice push higher, then shoot, we'll take it. The downside is this moving average curling back up. Again, no real stop loss point to the penny was given out, but essentially I do not want to see the price come back below these curling 10 and 20 moving averages. I would like to see these moving averages curl back up and start to support the price as we go farther. And then we can have maybe a nice move out of that. The downside, of course, as I said, was the 10 period moving average. Any close below this moving average right there, I would not want to see it. But I feel like this is a pretty good risk reward scenario, but we are going to need the backdrop of the market to cooperate to make this. Let's see, I see a question. Where would your stop be? Okay, on X for a multi-swing. So John, my thought would be we need to have some sideways action here. Stay away from the underside of that 10-period moving average. Ideally, that 10-period moving average and 20 will come together and start to support the price candles like a bird in the hand, and hopefully it flies away. It's a lot of ifs and thens, but that's what I would expect. All right. And again, on the downside, don't be watching on a tick-by-tick basis with your finger on the trigger, and all of a sudden it trades 2 cents below the daily moving average intraday, and you go, oh shit, Steve said don't. You know, many times they'll test those levels and bounce right back up. That's why I say, if you can, hang out for a close. If it's going to post a close below those lines, that's when I want out. That's when the momentum is no longer on our side. I'll say this, and I'll tread lightly here. All of our trade of the weeks are geared upon technical analysis and technical reasons. Every now and then, an opportunity might present itself that has a wild card, and I would say X has a possible wild card. U.S. Steel could very well possibly get a big bid in the next couple months for a big project at the border. I don't know. We'll see. But I don't use that as decision process. I use the footprints in the sand, the technical analysis. Anything else beyond that would be a bonus. So that was the genesis, the idea, and the reasoning behind picking U.S. Steel to the long side this week for the trade of the week. The market backdrop is intact. Really nice scan showed us a very well-known company trying to break its downtrend, and the sideways action is encouraged right now. So hopefully we can build up some steam and move up higher out of that congestion. That is the trade of the week.
Good stuff.
All right, so we're going to go back to the opening. By 10 o'clock Eastern, each day, I would like to know a few things to try and help me figure out where we could be going for the day. And Jamie obviously mentioned it earlier. He checks those compare count windows 15 minutes after the open, as do I. But I also check them again at the top of the hour. At the top of the hour, I would like to know these following things. What does my S&P compare count window look like? Now, I have to qualify this. I did a demonstration midday and I forgot to pin this window. So when I left the program and came back, these compare count windows will start over. If you weren't aware of that, that's what they do. So I forgot that, but it showed me something kind of interesting in hindsight here. I mean, I probably did this around lunchtime today. So let's go back to the SPY. And again, this window is doing nothing but measuring new highs versus new lows within the 500 stocks of the S&P. They track across the bottom here. We get a nice little intraday. It's dead now because we're after market, but this cylinder score is where it all comes together. So like Jamie said on the opening, his big cap stuff was showing like 60% green and 40% red. And typically I'm going to want to take a look at this as well at the top of the hour each day and see what's going on. Is it 60% green and 40% red? Well, if that's the case, then you can bet I'm going to be thinking, I don't want to be trying to go short today if that's the way the winds are blowing. But back to this example here, this started redrawing midday. And it was right about probably this candle right here, midday. About this candle, the pullback. And so I was doing a demonstration and this window reset. But as we were heading into the close with an hour to go, I looked down, it's like, wow, geez, giant bias for the second half of the day was just solidly to the green. So compare count window is one thing that I'm looking at the open, especially at 10 o'clock. Why am I talking about 10 o'clock? Because that is a significant time of the day for traders. If you'll notice, all the significant econ data comes out at 10 o'clock. Purchasing managers index, consumer confidence, real estate, home sales, things like that. And so a lot of times at the 10 o'clock hour, you may get a reversal due to news. But if it's a quiet news 10 o'clock hour and nothing really happens, that's also worthy of note, because a lot of times that could be where things can reverse. And so if you can get through that 10 o'clock news data point with no major issue, that's another thing that you can check off at the 10 o'clock hour. Obviously, going back to Holly, noticing this morning that in the first half an hour, Holly probably only had a couple trades, so low trade count being an observation, and the bias was long. So the AI was telling me at the top of the hour, be careful, tread lightly, not a lot of trades. AI is not really seeing it, but dipping her toe in a few things and the direction happens to be long. So that is also something of note. Scan the it's also important for me to know what is moving the market each day. So for the last day or two, the oil services and oil have been pretty strong. They've been leading the way up. So what we don't want to do is look at the market and get all excited and say, all right, let's buy a bank. Well, the banks are bringing up the rear today. They're not there. So here's another way to kind of drill down. Okay, we've using today as an example, we learned that the compare cat windows were bullish. Holly was showing a directional bias in bullish. And then if we want to drill down even further, we can say, well, looks like oil, energy, natural gas, stay away from that. Those are REITs. IYR is real estate REITs. Ah, look at that. SLX, we'd like to see that. That's US, that's the steel ETF. So these items up top, I'm paying attention to at the beginning of each day to make sure I'm focusing in the right sector if I do anything. And then lastly, something that's of interest to me each day is going to be the momentum scan. I try to keep it out of the way, but I will check it every now and then because I'm not a momentum day trader, but I'm curious as to what the momentum day traders are doing. And when I see the multi-strategy window called Extreme Volume High-Low Pro, and I'm seeing a lot more green than I am seeing red, that's just yet another indicator, excuse me, yellow being the downside, green being the upsides. So everything coming through here is momentum, either up in green or down in yellow. And this thing can also start to become a colorized indicator, if you will, to kind of see what is working at the top of the hour. Is it the downside momentum or the upside momentum? So even when we get to the top of the hour at 10 o'clock, that doesn't give us a guarantee that that's the way the day is going to go. We all know very well anything can happen at any time. Anybody can say something. The president, Fed Chairman Powell can say something at any time and move these markets. But it's just a habit that I've always gone through at the 10 o'clock hour, at the top of the hour. I would like to have a firm understanding of those 4 or 5 things I just showed you to help kind of give me a flavor for what the rest of the day could portend. So there's that. I do believe all we really have left here for today's session, guys, is looking at, chart requests. We got a few minutes here. Anybody have some charts you'd like us to look at? We can help you see if you're seeing the same thing we are, and if you're long, if you're short, that always helps to know. But I'll take a sip of coffee and wait and see if somebody plugs something into the question box there looking for a chart request. All right. Don, SQ, I assume he says long, so I assume he's currently long. All right, so as I had said in the Trade of the Week content, where is it? Pretty much all the daily charts out there look the same. Major corrections. Not to be any different with Square. All right, first thing I'm looking at is a nice couple of days bounce here. The volume's not bad. It's got decent volume. I would kind of look right here and draw a possible pivot line where it was support back here. Adjust that just a little bit. Support back here on these days, and then look, we broke that, came up, hit it, kissed it again, pulled back, and then got the battering ram and then pushed through it. So I would not like to see the price come back and close below this 58.03 level for the most part. I wouldn't be surprised to see a little bit of headwinds coming at you here. It was this dawn. I wouldn't be surprised to see a few headwinds coming up here as these moving averages do come into play. I don't know how much money or how much price you have underneath you, but I would just keep an eye on that that orange line. That pivot line is always going to be stronger, in my opinion, than a moving average line. Because it's just the way it is. It's just the observation that I've had. So, where we go from here could be a little of headwinds, but ideally higher. Breaking out of that downtrend would certainly be nice for you. But like many other charts, here we are, kind of at the crossroads, waiting to see what's going to happen. Could go either way. All right, so that was Square. Somebody else. Oh, somebody. How do you connect interactive brokerage to Brokerage Plus? That's a loaded question, but essentially, you know what? I can't even go into that right now. So who asked that? A friend. If you send an email to info@trade-ideas.com, we have a 3-part video on how to connect to Brokerage Plus, and it'll be pretty intuitive if you see that video rather than me trying to explain it here. Okay, David says XPO got cut in half and then consolidated sideways. It looks to me like it's reversing. So let's see, XPO got cut in half and then consolidated sideways. Well, you know, it's trying to do that constructive little thing I talked about earlier, where the moving averages, all of a sudden, we broke above that declining 20, and now this 10 is starting to come up. These moving averages are going to start to curl up. And as long as you can stay above those 10 and 20s, it's got a shot for a possible reversal. This is a transportation stock, definitely been beat up, like you said. I mean, that's a healthy correction. All right, I don't. Let me rephrase this. I see a very good possibility for this to maybe move up to higher levels. I do. All right, how about Twilo? Well, relatively speaking, this guy's hanging on okay. Expended a lot of energy getting from here to there. What I would do is probably just set a price alert at today's highs. But again, it's expended a lot of energy. We've got some big, long candles here. It might give you a couple of false readings, but as long as it hangs out up here near highs, if you're already long, great. If you're thinking about it, you can come in and put a price alert there at today's highs. But personally, I wouldn't mind coming back and seeing this gap even being filled, just for the sake of filling gaps. You could put a couple of wicks down and then it could move right back up. The best news of all is that this thing has been showing great relative strength relative to the general market. So the big plus for that one. Yeah, if you're looking to play options on it, that's even better. It gives you more time to just absorb the back and the forth, and you know what your loss is, and you know how much time you have. How do you populate the pivot line on the chart? Sure, Jose. So what I do is once I see something of interest that I like, let me turn this off. We're done with this. It's nothing more than a right click. I'm going to turn off that price alert. I'll show you if I want to create that pivot line, kind of eyeball my crosshairs right there, right click, mark up a horizontal line. And from there, if I want to adjust it, watch my cursor change. There we go. I can adjust it by grabbing the left mouse key and dragging it. And so that's really my favorite indicator, is just looking at pivot lines. Resistance becomes support, support becomes resistance all day long. That never ceases. That's just the nature of price action. It's the nature of crowds and the way prices move. All right, so I think that was the last request. It was, in fact, so go ahead and bring Scott back in. Oh, is there another test drive coming up? You know what, I'm going to leave that for Scott, friend. One real quick one, INSG, but yeah, it's a good question. INSG has expended itself. There's a perfect example of the day and a half, full day movement, and then a day and a half day reversal, but it's hanging out up here. It's kind of a broken chart up here. I'd rather see it come back and maybe touch that rising moving average, and maybe you get a second chance at it. But up here, this musical chairs, anything can go. All right, so come on in, Scott, and I think you had a question on test drive.
Hey, thank you. Why don't you pull the slides up? Yeah, there'll be another test drive coming up in the first half of February, so stay tuned for your invitations. If you're coming to the webinars, you'll already be on the list. We've got a podcast that's going to have a new episode coming out on Friday, so make sure you're tuned in for that. Just search for Trade Ideas Podcast in whatever app you use to listen to podcasts in, and add us as a subscription. Then you can explore the back issues while you wait for the new one to come out on Friday. We have a book. This ebook has 5 strategies that are essential for staying in the green when the BTFD doesn't work anymore. Go ahead and download that if you don't have it already at trade-ideas.com/ebook. Just put it in your email address, get the download link delivered to your email. We have a code that will save you 15% off your first month or year of any subscription. Just use Get Started, all caps. And you can also use that to do an upgrade if you already have a subscription, but you're on standard and want to get into premium. Just go ahead and log into your account and apply that at the Change My Subscription area. If you have any questions, email us, info@trade-ideas.com. Be sure to follow Steve and Jamie. Steve is at Trade is at Today Trader. I couldn't get that out for some reason. And we're missing Jamie's on there, but it's at QuantBot. That'll be around somewhere else you can find. Facebook.com/Trade Ideas Pro is how to find us on Facebook, so you can like our page and then get the updates and share that stuff with your friends. It's all fun. But again, email questions to info@trade-ideas.com. That is the best way to get responses. We'll have a recording of this webinar up tonight or tomorrow morning, and we'll send you an email as soon as it's available. Thank you, Steve. Thank you, Jamie.
All right. You got it. See you next time.
All right, later on.
See you tomorrow. Bye-bye.